If you can acquire an asset, have the tenant pay the cash flow, have excess equity that even after you refinance and pull most, all of the initial investment back out from your capital partners and put that money into another deal, then absolutely.
One of my questions was that I've been seeing programs that get released for like first home buyers and people talking about being able to leverage that towards some of the newer deals that you're doing as a beginning investor. So would you recommend that someone can take advantage of some of those vehicles just to lock down a property and then they can refinance it as a LLC? Is that something that's possible?
Yeah, I mean, possible, not always probable. That whole refinance into a LLC when you go and get a conventional loan like that can be challenging. With the more likely scenario would be that you'll be able to cover that inside of a trust. That's a whole different play. But start where you stand. I mean, the idea is to start where you stand and evolve over time, right? I didn't always buy properties in LLCs. When I bought my first, I don't know, 8, 9, 10 of them, they were in my name because I didn't know different. You know what I'm saying? Nobody told me that I should do it differently, so I didn't know. It's just when you know better, you do better. But in the interim, if a LLC or your signature is the difference between whether you got a deal or not, then you should run with your signature. You know what I'm saying? And then just get better over time. Just don't make a habit of doing that all the time. But absolutely, if you can go and put 3.5% down and sign your name, do it.
Got you. And then one of my next questions is when you are investing into multifamily real estate, I've heard options being explained as refining the property, taking 30% to use and leverage it to buy another property. Do you recommend holding the debt on those properties and you keep refinancing for tax purposes and things like that? Or should you be working to try to pay off each property to cash flow them completely?
I think again that depends on what your goals are, right? It's if you, the older you get, the more you want to mitigate risk. So older people would probably want to take the approach of getting everything paid off as soon as possible because you don't want to carry as much debt as you get older in life. For most people, okay. That being said, if you can acquire an asset, have the tenant pay the cash flow, have excess equity that even after you refinance and pull most, all of the initial investment back out from your capital partners and put that money into another deal, then absolutely, because the deal is taking care of itself. So let's just say you don't do that, right? You buy the deal, you got $600,000 mortgage on it, and you got 400 grand in equity in it. Okay, the thing bringing in, call it 3 grand a month net. You could just keep doing that, right? But the question is, so are you going to take that cash flow and just continue to double up your mortgage payments? Or are you going to just let the asset sit there and just keep going at the rate that it's going until organically the debt is being paid down?
Got you. Yeah, that helps. My cousin was explaining that.
No, I'm asking you now. So what in that scenario, would you take your cash flow every month and just use that to keep paying down the debt until it's paid off? Or would you take your cash flow every month?
For me personally, I would want to keep paying down the debt. So even if I acquire the one property and refi it at some point, 30%, use it to put down on another property, I want to use as much as the cash flow and even active income to pay down the lowest property, get that property paid off, and just keep repeating it.
Right, but listen to my question though. So let's just say you're making $3,000 a month, right? Your mortgage payment $4,500 a month. You making $3,000 a month after your mortgage payment. Okay, would you take that $3,000 and make additional mortgage payments to continue to pay your debt down, or would you take your $3,000 as profit every month?
Oh, I see what you're saying. Yeah, I think I would probably take it as profit every month, or maybe split it. maybe half 1,500 profit, and then maybe double the other 1,500 down on the payment.
So in your case, then you probably shouldn't refinance. You see what I'm saying? Like, you see how I illustrated it's a personal preference? Like, if that's important to you, then don't do it. But if you were gonna say, no, I'll just take my $3,000 a month and let the mortgage pay itself down, then it's like, well, why not pull out the other 250,000, right? Leaving 150,000 in equity, take that 250, go put that down on another building, and you still netting $2,000 a month, but the same thing is happening. But now you just increased your net worth and your income over here. So it's just a matter of preference. It's not a right or wrong. It truly is a matter of preference.
My question is, I want to talk a little bit about the wholesaling part of real estate. Earlier, you had mentioned that you could get a list from the MLS list. And so, what would be the verbiage I would use with the real estate agent to go that route?
Yeah, great question. So what you would do is you would still need to know what your criteria, right? So what market you want to go into, what price point you want to be in, and all those things. Okay. You would just hire your agent as if you were flipping properties. You wouldn't go in telling your agent that you plan on wholesaling the deal. So you would say, hey, I'm an investor. I'm interested in flipping properties in this particular zip code. I'm looking for properties that have an ARV of, $250,000 or less. The more distressed, the better. My team of investors, we buy 4 or 5 deals a month. We looking to really solidify our footprint in this market and let them start sending you deals. And then as you evaluate those deals, you start to submit offers. Once you get them under contract, then you figure out, are they viable opportunities for another investor? I said that backwards. You really should find out if it's a viable opportunity for you to submit the offer, right? We need to be clear about, we make our money when we buy. So we should know what our strategy is before we submit the offer.
Okay. Okay. So then once you submit the offer and you get the offer, then I would find a buyer for that property.
That's right. And in a perfect world, already have an idea of buyers that you like to work with. But if you don't, then I would just say to expedite that process, you probably want to align yourself with a community of people that either wholesale and or buy properties. And if you don't have if you're not doing it in a hot market that's like easily recognizable for people, then you will want to join probably Facebook groups of that local area for people who are most familiar with your market.